Hello investors, this is Jay here from SRE Research. Today, we'll be giving you all the information you need about equity taxation. First, let's talk about the taxes levied on the receipt of dividend. So whenever a listed company distributes dividend, it will be taxable in the hands of the shareholders as per the income tax slab rates. Also, the company distributing the dividend will deduct TDS at the rate of 10%. Second, let's talk about the taxes levied on the sale of equity shares. So when we sell our shares, we need to pay capital gains tax. So what do you mean by capital gains? Simply put, any profit or gain that arises from the sale of a capital asset, such as an equity share, is a capital gain. So now there are two types of capital gains based on the period of holding: long-term capital gains and short-term capital gains. First, let's talk about long-term capital gains tax. If the period of holding, which is the period between the shares bought and shares sold, is more than 12 months, the gain on sale on those equity shares will be considered as a long-term capital gain. So, if the period of holding of a shares is more than 12 months, the tax rate is 10%. Now, long-term capital gains tax is not applicable on all the gains. It is only applicable on gains above 1 lakh rupees. Let's take an example where the total gain on sale of shares is 90,000. Here, you are not required to pay any tax. However, if our gain on sale of equity shares is 1,20,000, we need to pay tax only on the exceeding amount of 20,000, as long-term capital gains tax is exempt up to 1 lakh rupees. Now let's talk about short-term capital gains tax. If the period of holding is less than 12 months, the gain on sale on those equity shares will be considered as a short-term capital gain. Under short-term capital gains, the tax rate is 15%. Here, you do not get the benefit of tax exemption up to 1 lakh rupees. So even if a gain on sale of equity shares is 5,000, you need to pay 15% on that said gain. So now you know all about equity taxation. Thank you.